you, and it will read, if I and you agree, one of us should not be here. Right? So the officers also may not want to agree with what we have to say, but leading evidences may help us to convince the revenue, or at least at an appellate level at a later point in time. We could also look at various other aspects. For example, I have got some shares, I am dealing in these shares, in some shares, but some shares I have given as security to the bank for obtaining a loan. Now the shares that I have given as security will normally not be my stock and trade, it has to be my investment. Nobody will give a stock and trade as security and pledge it with the bank. Of course, if it is cash credit, maybe yes, but for shares, nobody will give cash credit. So that is one possibility that you could look at. Whether the assessee is trying to get controlling interest in some other companies, etc., could be a good test. Listed, unlisted itself can be a great test to look at. Whether it was held for a substantially longer period can again be a test which you could apply. Now, as I said, the tests are galore. But then, as my friend, my earlier speaker was saying, the confusion does not stop here. Not just with the fact whether it is business or capital gain. What my Mr. Murli would say as creative accounting. In fact, the earlier speaker made a point. The assessee is the person who knows how to, earn income best. That is why I am here as an officer. Same thing applies to us. If we knew how to do business, I am sure every one of us would not be practicing. It is because we don't know that we are sitting at his beck and call and trying to, get little bit. In fact, the CPE chairman would also say, I got into a niche area, but then he doesn't understand how much is pushed under the carpet before it comes to us. We get a minuscule portion of the total assessees. How many assessees are involved in litigation? As the earlier speaker said, if 100 returns are filed, only 1% is scrutinized. So my cases can be only out of the 1%. Out of that, how many will have addition, how much will come to litigation? We don't know. So my share is also very small. Volumes may look big. Values may look big. Volumes will become small. That's the catch here as well. There, volumes may be bigger, values may be smaller. Ultimately, it will all even out. Let's not really bother about it. Now, the confusion starts again with the attitude of assessees. Until last year, he would be continuously showing it as business. When the law gets amended, immediately he says, no, this is investment. To say that capital gains is exempt, that is when he changes his mind. Now, of course, there are decided cases on this which we will come back to. This is typically like, agricultural income, agricultural land. First thing we ask him is, have you been carrying on agriculture? He says, sir, yes, sir. I say, okay, have you shown agricultural income? No, sir, I didn't earn any income. Okay. Now tell me, what is your drawings? He will tell you a drawing figure. That drawing figure will not be enough for him to eat 3 square meals at all. How would he have spent money on agriculture and lost money out of the drawings? He will say, he will show only 1,44,000 rupees drawings for a family of 4 people. And he says, I have used out of this 1,44,000 some amount for, agricultural activity, and I lost 38,000 rupees also. What did he eat with then? Those questions still remain begging. It's typically a assessee like this will come to us almost every other day. In fact, one assessee came to me and said, sir, the assessing officer is not allowing the additions to the building. I have done so many additions to the building. I said, okay, you have done additions to the building. He said, you are all old, sir. I have not kept any vouchers and this is my personal house. How can I keep vouchers for all this? I said, okay, give me your drawings for year on year. His drawings is only 3 lakh. The amount of addition he says he has made in the year is 30 lakh. Where is the source for the addition? I am not able to gather. See, end of the day, it is just a question of matching his cash flows. Unfortunately, that's not to be. And assessees make all tall claims. Sometimes I believe that the last person to have faith in practice is your client. The department seems to be a safer bet. They are more dependable. In fact, I have seen any number of situations where my client would tell me, sir, I am in great difficulty, sir. At this time you are asking me for fees, sir. I am sorry, sir. Difficulty, sir. I am not able to pay now. Then there is a search action from the department. And the department finds cash of 3 crores. And he says, I am not able to pay your 30,000 rupee audit fee. This is what he would have been telling you from time immemorial. And after this seizure of 3 crore, he will quietly come to your office after 6 months and all when this problem is solved and say, sir, is there any possibility that VDIS is coming? That means what? Even department has found only the tip of the iceberg. Now the 100 crores which department is claiming to have found is nothing. Our fellow will have much more probably. I am not for a minute holding the brief of either the department or the SSE. But then let us understand that SSEs have also been extremely innovative. Now what has been happening is conversion of a stock and trade into a capital asset. Now you will all recall that section 45(2) has an express provision which says conversion of capital asset into stock and trade is held to be a transfer. We will recall the good old decision of Supreme Court in Bhai Shireen Bhai Kuka, where Supreme Court said no person can make a profit out of himself and said conversion of capital gain into stock and trade cannot give rise to income. Therefore, 45(2) was amended to say conversion of capital asset into stock and trade would be regarded as a transfer and capital gain would be chargeable to tax. Corresponding amendments in the definition of capital asset as well. Now, while this was so, assessees hit upon an innovative idea, particularly post the amendment when capital gains was charged at a lower rate or at nil rate, of converting their stock and trade into capital asset. Now this is all done through just an accounting, creative accounting. Not even accounting technically, it is only recording. In the balance sheet, from investment or from stock and trade, it will go to investment column. That's all will happen. Barring that, nothing would have happened. Now there are a series of decisions. As I said, I am not fully in agreement with some of this, but as I said, I don't have to always agree with myself to argue or to urge a point. In fact, once when I was arguing a matter, somebody from the bench shot out a question saying, Mr. Bhanushekar, are you convinced about what you are saying? My reply was, I am not here to convince myself, but your honors. It's as simple as that. Why should I convince myself? Likewise, when I am talking about this conversion of stock and trade into capital asset, it is just a movement in the balance sheet of an assessee from the stock and trade to capital asset or investment. That is it. Now, interestingly, the tribunals have taken a view that it is very much permissible. And in fact, the tribunals have also said that there is no mechanism to charge capital gains tax or any other tax at the time of conversion of stock and trade into capital asset. They are drawing reference to Bhai Shireen Bhai Kuka and to the provisions of 45(2) and saying that it is not possible. So what can be done is only to tax the difference between the sale value and the indexed cost of the book values, because it is transferred at book values, the indexed cost of the book values, the difference between these two as capital gain. In fact, I have personally argued one matter before the Chennai Tribunal and been successful at it. But then even in such cases, there have been some distinctions that have been drawn. In fact, there are two decisions of the Mumbai Tribunal. One is Bright Star and the other is Indo-Stostec. In Bright Star, the tribunal held that it is possible to convert a stock and trade into capital asset, no tax arising at that point. When it is later sold, the point was that it will be treated only as capital gain, and probably the assessee will also enjoy an exemption saying it is a long-term capital asset, because he will count the period for which it was held as stock and trade also for the period of holding. Logically, that's what he would do. And that's what the law also permits. And that's how the trick is played. But if you take Bright Star, the asset was reclassified into investment on 1/4/98 and was sold in the financial years 99-2000 and 2000-2001. So a gap of at least 1 to 2 years was existent. The tribunal held in favor of us. Take the other decision of the Bombay Tribunal. The Mumbai Tribunal said, look at this case, the assessee has converted it into capital asset or investment and immediately thereafter sold it. So we will not agree. It is clearly a case of only an accounting jugglery. Now take the case which I myself argued before the Chennai Tribunal, which is in the case of one Raman HUF. There, interestingly, the assessee had passed or moved it from stock and trade to investment, but had sold it rather immediately. But the distinction we were able to show was 95 to 99% of these shares were held for a minimum period of 3 years and for a period up to 15 years in some cases. So we said, if I may have wrongly classified it as stock and trade, but the fact that I have been holding it for not less than 3 years and up to 15 years itself demonstrates that it was always an investment, and I only corrected my accounts accordingly, which the Chennai Tribunal did find favor with. So unless we can demonstrate factually, it may be difficult to take this risk to say that I have converted my stock and trade into investment. So again, as I was saying, it is that period of holding which has taken the decisions either way, either in favor or against the SSC. Incidentally, the CPE chairman was also addressing about certain issues like what happens if a government employee is tomorrow said to have carried on business. Now, I would personally think that stretching it too far to say that a government employee per se, it being classified as business in his tax assessment, means that it should be treated as business, that he has carried on a business activity may not be a correct thing. In the sense that we are all aware that if I am in the business of letting out premises on hire, still the income is charged under the head house property. Now let's assume a government servant has a property, a commercial property, and is the business of letting it on hire. It is taxed as house property. Will any government official or authority question him saying, oh no, you did not carry on business? Still, so what matters is not the head under which it is assessed. The head may depend on circumstances. That may be unique to taxation. That has nothing to do, in my understanding, with treating it as business or treating the person as having carried on a business or otherwise.
What happens if it is assessed in the hands of the practicing chartered accountant?
I would still think there is nothing wrong in the hands of a practicing chartered accountant if it is assessed as business. That is for taxation purposes. You cannot say I am carrying on business in. In my view, I would think that the best thing is not to file an appeal if he is willing to pay the taxes, for simple reason, if it gets affirmed in appeal, he would be worse off. Because you can predict anything but not an appellate order. It is that day, that moment, that mood, that's all. Now keeping this, there are other more unique things that are happening as the time progresses. Portfolio management. Now what about portfolio management? In fact, the early decision on portfolio management came from Delhi Tribunal, where they said portfolio management service itself means it is business. Very unfortunate. Fortunately, within a very short span, that got reversed at the Delhi High Court level and said it is not a business in this instant case. And it went a step further. The law went a little further, and there are now several tribunal decisions which say that the very fact that somebody has chosen to use portfolio management service itself means that he is an investor. Because an investor's objective is to maximize wealth. It is not to maximize profit. It is to maximize wealth. And every person who goes to a PMS will want to maximize wealth and not profits. The law has evolved that far, and I think that's a great way of looking at the portfolio management service, because I would personally think that no businessman will go and put money in a PMS. Volumes could be high, trading could be high, daily trade may happen, etc., in my accounts, because these are all pooled and traded. Likewise, we have newer instruments like futures and options, day trading. In my personal view, any day trader should be classified as business. And a step further, speculation business, which means the profit or loss will be treated as speculation, profit or loss. And in my opinion, almost no speculator makes profit in the long run. Every speculator will end up with a loss, and that loss can only be carried forward, cannot be set off against either income, set off only against speculation profit in subsequent years, and department knows that nobody will make the profit. Because anybody who makes profit per chance in speculation will immediately think that speculation is the easiest way to make money and start investing more and more into it and ensure that he loses. That much I have seen. I have never seen a speculator make profits. Investors have in the market. Futures and options, you have a very interesting amendment in 43.5 to say that futures and options can be treated as being under the head capital gains. Now, first thing is, there seems to be a slight degree of confusion here in the sense that basically we all understand that if I am a speculator doing day trading, it has to be business in the first place. It cannot be capital gains at all. Likewise, futures and options, the amendment is in 43.5 to say that if you satisfy all these conditions, we will not treat it as speculation business. Now, what I would not understand is the fact that the law seems to be very clear that futures and options can never be classified as capital gain. And we will appreciate that futures and options are, the nature of the instruments are itself such that you can never deliver. It's incapable of delivery. In fact, this amendment created more confusion than solved. Because we have always been arguing these are incapable of delivery, how can you invoke 43.5? Now the amendment said prospectively that it will be hereafter treated as non-speculation. Now what happened? Department started saying up to then it is speculation. We are still fighting. Fight will go on. But what is the chance of success? It probably becomes weaker. Just like, this 54F or 54 where they said you can only one house, but amendment came effective 15-16. So immediately Madras High Court said, see 15-16 it has been said one house, so prior to that it was always more than one house. Same problem happens in the reverse when 43.5 got amended, and to say that it is to be treated as business. Of course, there are some tests to be satisfied to see whether it is electronically done, whether it is done through a recognized broker, whether the PAN number is there, the unique identity of the client is there, all those tests would be there to see whether it is speculation or non-speculation business. But the fact remains that even in futures and options, that is derivatives, it always will be recognized only as business and can never be recognized as capital gain. Is probably the one lesson that we have to learn. And we also have another interesting explanation to section 73, which has probably long outlived its utility. Long outlived its utility. See, there was a time when people used to have group companies, and in the group companies they used to do internal arrangements of selling the share from here to there to here, so they book profits or losses accordingly to ensure that their profits are at the least. In fact, if you see the introduction of 73 and the memorandum explaining the bill, they have expressly stated that this is the objective of the explanation to 73. But unfortunately, the law does not contemplate of it. It says, it is something like a deeming fiction. It says that if any assessee being a company has bought and sold shares of other companies, then it is deemed to be speculation. Unless it falls under two exceptions. One, the assessee must be in the principal business of banking or granting loans and advances. This is one exception. And the second is the aggregate of income under the heads other than business income should be more than the business income. Excepting these two circumstances, it is deemed to be speculation. Of course, interpretations galore. In fact, there is one decided case of the tribunal, I do not know what fate it met in the High Court, where an assay successfully argued, please see the language. It says buying and selling of shares of other companies. I bought and sold shares of other company only, not companies. Therefore, I am not governed by the explanation to 73, and the tribunal held in favor of assay, saying it's a deeming fiction, we have to interpret it strictly. Then somebody would say, the department would say, no, mutual funds are covered by this. Matter goes up to Supreme Court and says, no, this is applicable only to shares. You have not used the word securities. It goes on, the confusion goes on. But then, the simple question that comes to my mind is, it is arithmetic at the end of the day, leaving all interpretations apart. A fact whether I am engaged in the primary business of banking or lending, that is one aspect. Second is aggregate income under the three heads. Of course, a company cannot have salary, so there will be only three heads left. The aggregate income under the three heads should be greater than the business income. Now, there can be very many scenarios that we can look at. Now, simple issue is, my doubt is whether a particular income is to be treated as speculation or non-speculation. Now, that very income, under what classification do I bring it? The fact remains that it is business income either way. So, we will not have any difficulty in classifying that itself as business income. The next issue will be, what if I have losses? Interestingly, there is a Calcutta High Court which says, if there are losses, you take the absolute number. That looks a little preposterous to me. Supposing my aggregate income from business is 10 lakh, my aggregate income under other heads is 9 lakh. 9 lakh versus 10 lakh is higher. Now, supposing it is minus 11 lakh, the Calcutta High Court says, look at 11 versus 10. So, 11 is more, therefore. And they seem to have peculiar logic for it. They are saying, look, his larger activity is here only. That is why he incurred more losses here. So, all kinds of theories would go on. But then, most crucial as far as 73 is concerned, and I will stop here, because I am aware that I am very much standing between ourselves and lunch, not between you and lunch. For me also the same problem. Right? So, one last aspect we have to be very, very clear about on explanation to 73, where there seems to be quite a bit of confusion, is that if it is established that the income is from a transfer of an asset being a capital asset, that is, if it is to be assessed under the head capital gain, the explanation to 73 has no effect at all. The explanation to 73 only talks about a classification of a particular income or loss as speculation income or loss. Speculation itself means first it is business income, then a subclassification of speculation or non-speculation. That's all. So when we say this, we have to be very clear that if you can demonstrate that it is an investment and it is assessable under the capital gain, explanation 73 does not apply. And we will also, to close with, recollect that explanation to 73 has a clear overriding effect over 43.5. So even if you have taken delivery, if it is held to be business, then explanation to 73 will get invoked, because explanation to 73 is a specific provision while 43.5 is general in nature. To that extent also we will have to recollect. Now friends, in the limited time, what I have been able to share with you is only some of the aspects that are in our minds. Maybe there is a lot more to the subject. The subject is an ocean, and as the Supreme Court rightly points out, the issue as to whether a particular transaction is under the head business or capital gain is a mixed question of law and fact. So this is the best way of putting it. It is neither a legal issue nor a factual issue. So we don't know what it is. And Supreme Court would say this is a mixed question, therefore it has to be decided that way. So given all this, we have only tried to address some of the major issues that we could have. And I have probably tried to give some of the ideas that were in my mind as to how we could help an assessee to demonstrate that a particular amount or a particular transaction should be treated as business or capital gain, etc. And to my mind, the most crucial will be the way the balance sheets are filed and accepted over a period of time. Particularly with regard to valuation. With regard to the way in which you have capitalized the expenditure or claimed the expenditure. These could be very good tests. And that is something where I think assessees have been lacking. This could be to my mind, one of the best ways by which we can demonstrate saying you only agreed with this earlier years. How can you come back and say this? Friends, as I said, these were the random thoughts that were in my mind and based on the judicial precedents, etc. I'm sure every one of us has many issues that we would like to have addressed, because with the permission of the CPE chairman, who is also technically sitting here to coordinate the session, if time permits, maybe we can still share our thoughts, or I would be here for some more time and we could still continue to discuss. Thank you very much.
Thank you very much, Mr. Bhawan. 5 minutes, kindly bear with us. Kindly drop your visiting cards in the box, and as a token of love and affection, I request the president, past president of ICAI, to hand over a memento to Mr. Bhawan. And dear friends, when I said 5 minutes, we want to honor our past president of ICAI, Mr. Ramaswami, who have come here. So I request our staff to give the shawl and the garland. I want to tell you, nowadays students are getting 15 minutes exclusive time for reading the question paper alone. All those aspects, when I was chairman board of studies, when he was the president, we brought so many changes. The tier 2, tier 3 cities, the students and members, what are all the difficulties they experience, we have to approach it with a very compassionate way. That is how we have done. In fact, there is a very long queue. So I thought, I request Mr. Palguna Kumar, our regional council member from Tirupati, has come. Again, he is a tax expert. Yes, he is the member of our CPE committee. Many programs he has done on behalf of the CPE committee. I request him to introduce our Ramaswami sir. Then we can go for lunch. Kindly bear with us.
Friends, I take it as my privilege to introduce our illustrious past president, Sri G. Ramaswamy. As we all know, he is from Coimbatore. He is 60 years young, and he is a member of the not only the Institute of Chartered of India, he is also a member of the Institute of Company Secretaries of India, an erudite speaker, energetic leader, and an eminent professional, so multi-dimensional. He is practicing for the past 30 years in his own firm name, and he was elected as a board member of the IFAC since November 2011. He is one among the 22 members of the board of IFAC, and as we all know, it is an organization consisting of 164 members from 125 countries with different jurisdictions. He is also the member of the finance committee of the IFAC, and he was the Coimbatore branch chairman, and from then he has become the SIRC chairman, and after that he went to the Central Council and has become the president of the institute. He served the Central Council for 3 consecutive terms from 2004-7, 7-10 and 10-13. He served the board of Confederation of Asian Pacific Accountants, that is the CAPA, and also SAFA, that is the South Asian Federation of Accountants. He has been the member of the XBRL International Steering Committee. He was the vice chairman of SAFA. He has been nominated on the Corporate Governance Policy Committee by the Ministry of Corporate Affairs. He is also a special nominee to the NACAS. He was, as the ICAI president, he was heading various standing committees, including the disciplinary committee of the Satyam bench, non-standing committees also, like several institutes coordination committee, international affairs committee, public interest committee. Finance Committee, Disciplinary Committee of 271, Section 21D. He was the chairman of the Fiscal Laws Committee, Electoral Reforms Committee, Accounting Standards Board for local bodies. Like that, he served on the several committees. Almost in his 30 years of practice, 25 years is dedicated to the cause of the profession in various capacities. During his presidentship of ICAI, he has organized an international conference at Chennai with worldwide accounting organizations participating. There is his credit to bring that many illustrious people to this city. Having started his professional journey as a member and then later as chairman of Coimbatore branch and SIRC, he has served a lot and brought the best regional council award during his time as SIRC president. He is a prolific speaker, also presented various papers on direct and indirect tax papers and delivered lectures on professional subjects across the nation. Besides all these things, Mr. G. Ramaswamy has been a passionate traveler and a keen golfer. So a down-to-earth personality, coming to the need and help of every co-professional. That's his human touch. That's how he climbed the ladder. And with this brief introduction, I am introducing our illustrious past president to you. Give him a big thank you. Thank you. I thank our CPE, ICAI CPE committee chairman and also SIRC CPE committee chairman having given me this opportunity. Tomorrow I will be there, full day with you. Thank you.
Thank you very much. Thank you, Mr. Palguna Kumar. In fact, what is to be seen, in Mr. G. Ramaswamy is that the number of local members of Coimbatore is very much less than whatever the target minimum required. Naturally, he has to go out and he have to get the votes from elsewhere. Now, even a regional council member is not there from the entire region there, from Coimbatore. So, whereas becoming a central council member is a tough job, unless and until you have to move with so many people, that networking you have to do, that he was doing. In fact, I was the secretary of SIRC when he was the chairman. A lot of programs, what we have done, we switched over to weekly study circle meeting, it was done. No CPE those days. See, nowadays at least you are supported by that. You won't believe when I put up this air conditioned thing during my period, as this thing, there is no CPE. And continuously it used to be full on Wednesdays. That was started only by him at that time, Wednesday meeting. He said, we had a monthly meetings those days. So he said, weekly meeting. TV Srinivasan was there as a weekly meeting. Sir, it's not possible, sir. Well, you say not possible. We are doing it. That's all. We are going ahead. So weekly study circle meeting we had. Meet the parliamentarian. We used to bring the ministers, member of parliament we used to bring. All the CMDs, Indian Bank, IOB. Everybody will come for our study circle meetings. And totally outside people. So what has happened? It was a tremendous impact at that point of time. And just I want to tell you the background. Till the time, the entire central council was direct entry only, unlike in other regions. So from the SIRC chairman who became central council member, the last president was Ashok Kumbat. Nearly 26 years, nobody got elected from the SIRC chairman as a central council member, where our entire team went to central council as such. Thanks to the program, thanks to the reach, what we were able to do the entire southern India. The person who has given that particular seed is Mr. G. Ramaswamy. That is the background. And that way we shared so many programs, conferences, all this inspiring this thing and all topics, all these things we used to do. First we will keep the theme of the conference. Then we'll go to the topics, then we go to the speakers actually. So that is the way we try to do. It was a tremendous hit where we were able to do the modernizing of the council, regional council, chairman room, president room, what we have put, which he occupied subsequently. When you are good to others, you are best to yourself. This is the Benjamin Franklin saying says. So that is how we have done. We have modernized our regional council. We put the air conditioning of Brahmaya Hall, getting the funds from Brahmaya Trust. We put the lift. When Jaipal Reddy came best parliamentary, he could not walk. He had suffered. So we put immediately, we got from Gopal Krishnan prayer, Lovelock and Louis, they have given there, and we have put the lift, all the infrastructure. BP Jain, Ruia has given for our